Yeah. Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, January the 25th, the year's 2023. Let's talk trading. Range trading, part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, we had a question from one of our trading buddies wanting to know about the Walmal lines and why you use the M or why you used H1 and didn't use M30.
Yeah, well, you got to remember back when I kind of was looking at the frequency distributions and such. That was, what year was that? That was probably 2018, 2019, somewhere around there. I don't recall exactly. Probably 2019. And back in that, at that point in time, in history, our hourly ranges were only somewhere along the lines of, 25 to 30 pips maximum on an hour. They weren't very big. You got to remember the daily ranges back then were very, very small. They were, 60 to 80 pips. We had gone into this area or time when things were much more compressed than they've been in recent times. So, pandemic, post-pandemic times, and so that you go and get enough of a range, when it's funny, we've been talking about range trading, and this is a type of range trading, but to get enough of a range, because I was looking to try to make 10 pips on a trade, not that you're going to get it all the time, but that was my goal, that's what I was shooting for. So in order to go and do that, I needed to go and have something that was big enough. And honestly, I think I only checked the hourly, and I don't believe I checked the 30-minute, but because the ranges were so small on the hourly, but it was big enough in order to go and make it work, I'll guarantee I never went down and looked at the 30-minute. Maybe it would have worked on the 30-minute, but I don't think it would have. I'm not going to go, and to be honest with you, I'm not going to go back and check, something that was 3-4 years ago. It's just not worth the effort. I care about today, not back then. So the answer that fellow's question, could you do it on the M30? Well, yeah, I think you can, because if you look at the M30 ranges, now today is kind of a compressed day. We've only got a daily range of about 56, 55 pips for the daily range, and our hourlies are going between 28, 30. I think we had one or two that are below that, one or two that are above that, but for the most part, they're pretty compressed today. But, typically over the last, year and a half, maybe 2 years, we've been sitting at typically at this time of day where our hourly range is 56, 60, sometimes even 65. That's on non-news events. It's just the way the market's been moving. And our M30, like for instance today, our M30 is between 16 and 13. And so sure, you could go and do that. You don't expect to go and get 10 pips on a 30-minute candle though. So maybe what you got to do is, go back to, that idea of, and people go back and look at those videos where I talk about the 135 method where, you're looking to get pips in that range, 1 pip, 3 pips, 5 pips, depending on what the market's doing for you, and just let it go at that, and so sure, you could go and do it. Yeah, I think he had said, that you get twice as many opportunities. Yeah, you do, but the only thing is that because you don't have as much range, you may not get as much range on any particular trade. So yeah, I don't see a reason why you couldn't do it. Just go and draw your lines on M30 and just go and use the M30 candle.
Yeah, but I don't know about getting twice as many opportunities because if you look at the chart right now, I've got the M30 and we're in the second half. And so the short would have been at the 30 line and you could have taken that trade. Now, with the new candle, with the new M30 or the current M30, you would have had another trigger at the 20 line. So if that's what you mean by twice as many trades, okay. But, if you would have been in that other short, you could have stayed in the short and said, hey, it just cracked that 20. Maybe I'll just, take my chances and see what happens.
Right. And I think that's what he meant. I think that, you just, you get to reset every half hour as opposed to resetting once an hour.
Right.
I think that's where he was going with that. And you can do that, but just understand that, you may have to go and adjust how many pips you're trying to get on a particular trade.
Right.
You're going to have to go and, look at the frequency distributions and pay attention to the charts and see what it actually gives you in terms of, opportunity. Because I don't do it, I don't know. But that's something. And the thing is, for me, I kind of like the idea that once an hour, I go and set up. I get my pips or I don't get my pips, and I walk away, get a break. That's what I kind of really liked about the Walmal method, was I could go and do that. If I was doing it on an hourly candle. If you're doing it on a half-hour candle, well, you get to do the same thing, but the thing is, you got to go and get back into the saddle, so to speak, a little bit quicker. Nothing wrong with that. If that suits you, that's fine. And that's the thing. I talk about this all the time. You've got to go and figure out what suits you. What works for Kiro, I'll guarantee you something totally different that works for Walmal, and what's totally different from any other trader out there. And that's the personalization of this, of trading. You just got to go and figure out what works you, what suits you, figure out the money management that works for you, figure out the method that suits you. Because if you're not confident in your method, you're not going to take the trades, and you're going to go and miss the opportunities. And then what's going to happen is, well, I got to go take a trade sometime. And you wind up maybe not taking the best trade, or you wind up just taking a trade and it happens to go against you. Now you're even less confident in what you're doing. And it just turns into this malaise where you find yourself in trouble. And it's it's a self-inflicted wound. And, that gets like, I know we're supposed to be talking about range trade, but I think this applies to any type of trade. You need to find what suits you, what works for you.
Right. And you mentioned something, and in fact, the trader had said something about his mindset. And the thing is, if you don't take all the signals, then the stats may or may not work in your favor. And so it's very easy to not take a trade because you're thinking of something. I've got an alert popping up on my screen. I'm gonna have to. I set the. I had set up a chart here. Let's see. Turn off. Sound alert. No, I know. Alert every time. False. I had set up a chart using the no-brainer indicator at the lines I like to trade. So we're hitting the 10 line. That's one of the entry lines that seems to have a lot of price action around. But back to the back to the psychology. It's whether or not your success is depending on whether or not you actually are taking the trades. And so if you enter the trade, put your stop loss in, and then, set your TP or take TP when you think you should take TP based on the current price action, you'll probably be a lot better off. But the thing is, if you don't take every valid signal, then what's going to happen is you're basically moving into the discretionary, in the moment, seat of the pants type trading, and it's not going to work. In fact, one of the things I had said to you before we got on the video was, I go, I'm thinking I could have taken that trade, and when price was, I forget what it did, I think it was coming down or something. But then the reality was I didn't have any signals. I'm just seeing price action, and you reply, well, that would have been a FOMO trade. It's like you don't want to miss out because you see all this price movement, but you don't have a signal, and you think, hey, I could have done this or I could have done that. But is that your trade? No. Is that part of your trading plan? No. So you have to modify those thoughts and go, you know what? That wasn't my trade. And price is going
It's okay
to,
to miss that
yeah.
trade.
Well, it wasn't a trade. It's like price is going to
Right.
move, but it's like you're not on a roller coaster. It's not like you want to
Right.
get every dip and rise. It's like, no,
Right.
you want to pick, the certain ones.
You want to pick what, you need to sit there and, and do the research, you know, sit down with the frequency distribution, indicator, take your method, run it against it, figure out what works, figure out what doesn't work, and then statistically, hey, I'm going to be here and I can be here long term. And on top of that, you said something very important. For those statistics to mean anything, you got to be in. You got to be in it. In order for the stats to go and make sense. Because when you pull out, you may get lucky and you pull out on something that didn't work out, but you also could be pulling out on things that that do work out. And I just find, for me anyway, maybe I'm just an unlucky fellow, but it seems like every time I pull out on the ones that I could have won on.
Well, yeah, yeah,
So you just gotta go and follow it. Now at the same time, where the psychology, that's what makes this tricky, because psychology does matter, and if you're finding out that you're playing head games with yourself, and and you took losses, you're not handling the losses very well, you know what? Then it's time to reset. And when you reset, that's different than just missing a trade because you're afraid to take the trade. No, a reset means that I'm purposefully taking a stop here, okay, to go and evaluate what's going on in my head, get my headspace right, walk away, take a cup of coffee, whatever it is that you've got to go and do to take care of yourself. Then you can go back to the chart, but you go back at a place where it makes sense. Maybe it's the next day, maybe it's the next hour, depending on what your methodology is. That's because now your statistics are starting all over again. That's okay. But if you're just going to go and play this game where it didn't work out, I don't know what I'm doing, and start beating yourself up. And next thing you know, this trade didn't work out last time, I'm not taking it this time. Next thing you know, that was the one that was going to work out. That's when you get into trouble.
exactly. And if you
And by the
have,
way,
I was going to say,
all that jibber
yeah,
jabber I just did, that's what goes on in my head when things aren't going well.
yeah. So if you use the smart range, what these percentages are, they're actually percentiles. So right now we've got 12.9 pips of range between the high and the low. It's at the 45th percentile. That means it's better than say 44 out of the last 100. That means 55 times out of the last 100, price actually went bigger than 12.9. So now it just went up to the 49 percentile.
Yeah, which tells you we're probably at a range, or at least you should start thinking, hey, we're at a range here. Which also makes sense because look where we are in terms of the hour.
Right.
We're sitting here, we only got about 2 minutes left in the half hour.
Right.
So yeah, it makes sense. And so there may be gas in the tank, there may not be gas. I don't know.
Yeah, well, I've noticed the last couple of minutes of a M30 or H1 candle, there's about 5 more pips of left in the tank. Sometimes I guess
Right.
people are punching their trades, and there's movement. Either sometimes it adds to the range, or sometimes it'll bounce off the bottom like it just did.
Right. And that's typically what does happen. And it's sort of like one of the things that I noticed also, that first minute candle of the hour, it's one of those things where it malaise, and then all of a sudden it goes, okay? And then usually the next minute goes and covers the previous minute, just something I've seen over and over again. But it's just, that, again, range trading.
Right. So you notice we were right around that 2310, and my alert came up, and you saw how much price action has been around that 2310. You could have had a couple of pips both directions right now. But guess what, fellow traders? The fastest 15-minute trading is over. So I hope you got something you can put in your toolbox, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is